It has been a roller coaster ride in stock markets around the world this week, kicking off with Monday's global sell-off, followed by a major rebound, including in Japan, where shares surged after record losses. Here to help us make sense of what's happening in the markets is Kenny Wen, Head of Investment Strategy at KGI Asia. Thanks, Kenny, for joining us. First of all, can you tell us what's behind this week's market mayhem?
I think it is driven by several reasons. First of all, now the market have a worry over U.S. recession. Frankly speaking, it's a little bit surprising me because for 2 or 3 weeks ago, U.S. just announced their Q2 GDP result, talking about 2.8%, which is much higher than the market forecast. But suddenly, everyone is focusing on the labor market report, especially the unemployment rate at 4.3%, which from the historical data, it usually is signal U.S. may subject to a recession. And also someone saying that Federal Reserve is behind the curve. They are not cutting the interest rate on time, so in order to avoid the recession. So it really makes the situation worse. And also I think AI-related stocks is also a focus. As we all know, they go up very significantly in the past 1 year. But I think the market focus changed it from what the AI will bring our development will be benefit the revenue. Now they concern about capital expenditure, because from the mega cap, they announced that for every quarter, they need to spend around 8 billion or 10 billion US dollar in AI infrastructure. So everyone is quite concerned about their corporate earnings. So their focus is from what we call top line to bottom line. Finally, some of the mega cap, their corporate earnings is worse than market forecast. So you can see that they sell off in those mega cap. And thirdly, I think the BOJ, the Bank of Japan, is a little bit aggressive than we think. So we see some unwinding on the carry trade. So I think these 3 reasons drive the market to have a sharp correction.
Right. So looking ahead, should investors brace themselves for more market volatility?
Yes, I think so. Yeah. Even though we may have short-term rebound because someone will close the short position or try to buy on dips. But as you mentioned, those 3 reasons, they seems that they will not disappear in a very short period of time. For carry trade, for institutional investor, it takes time to unwind all their position. And then for U.S. economy, I think the August labor market report will be very important. But it will only announce in the early September. So coming days, coming weeks, we're still concerned about carry trade, concerned about U.S. economy. Also, don't forget the geopolitical in the Middle East issue. So it seems that we don't have much positive factor, and that will bring volatility to the markets.
What about the Chinese economy? How much will that weigh on the markets?
I think it already priced on the Hong Kong or China stock before this round of correction, because what really makes us disappointed is Q2 GDP of China is 4.7%, and the market is forecasting 5.1%. So you can see that the data is really disappointed. And also for Hong Kong investors, they do have a lot of expectation of policy announcement. But finally, it seems that until this moment, a little bit delayed. So at least we don't think we don't get the real impact from those policy on economic data. So that's why the Hong Kong market dropped below 17,000 before this round of global correction. But on the other hand, given the past few days, Hong Kong stock, given the low valuation and less impact from the carry trade, Hang Seng Index is relatively resilient compared with Japan, compared with US. It's very interesting.
Okay. So to sum it up, what economic or regulatory factors will we need to happen to calm the markets?
I think the key will be on 2 things. First of all, maybe BOJ can announce a relatively dovish statement to make the market less worried and make the yen to stabilize. That will help the unwind of the carry trade. And on the other hand, the key will be U.S. economy. So in the coming few key data, if we have a better than forecast data, then we will create what we call soft landing or Goldilocks economy. Then will be much important or essential for the market sentiment. Otherwise, do prepare that in the coming weeks, the market will be very volatile. And the key message I give to every investor will be try to diversify and not to bottom fish all market in once.
All right, some wise advice there. Thanks so much, Kenny.
Thank you.
And you can get more market insights into what's happening in Asia and around the world by visiting scmp.com.